Onto corporation tax rates. Of course, most of you will know that from the 1st of April 23, the main rate has increased to 25%. It was 19 for a number of years before. And we've also had reintroduced marginal relief. That relief now is given where there's only one company involved, where the profits are between 50,000 and 250,000. So quite a small range for that marginal relief to apply. And previously, we had much higher thresholds for the marginal relief. R&D has had consistent changes over the last year, 18 months. And that's for several reasons, but I think one of the major reasons is HMRC being nervous about abuse and about error within the scheme. Now, of course, they still want to incentivize growth in the economy, and the big part of that is via innovation and innovative businesses that potentially will grow and take on lots of staff. But they also need to be reducing what they perceive to be significant fraud and error within the schemes. The third prong, talking about supporting innovation here, I mentioned earlier the concept of an R&D intensive business. That's one where the business spends 40% or more of its total costs on R&D. And for these purposes, HMRC look at the aggregate spend across all connected companies. Now, we have a different connected rule here than we do for the associated companies rules, and I'm not going to go into it in detail, but it's the rule defined in section 1122 of the Corporation Tax Act 2010. And effectively, if one person controls multiple companies, they will be connected. There's more to it than that. There can be other ways companies can be connected there. So that might be important for looking at whether a company can claim the R&D intensive route of R&D relief, and that effectively allows them to claim the old surrender credit amount of 14.5% rather than 10%. So that's worth quite a lot of money to companies that can qualify for that.